Alright guys, what's going on? It's your boy LupoFX back with another video on the trading section of this channel. So we already discussed in video 2 and 1 that first of all it's going to be, a hard journey. You need to be courageous, you need to believe in yourself. I talked about this in episode number 2, go and check it out if you haven't. And in episode 1 we talked about that it's important to be adaptive to the market. Whatever you need from these videos, they're all in a playlist, go and check them out. I think that will help you tremendously because psychology is in fact, at least from my perspective, a pillar of trading that you need to be having in your tool system to actually become a profitable trader. Just on a quick note, what are the 3 pillars from my opinion? It's going to be risk management, understanding market structure, aka having a strategy, and number 3, having your psychology in check. And with this third video on psychology, I want to be talking about I always try to keep my videos more short because I know guys, your attention span, it's not what it should be, right? Like literally the attention span nowadays, oh my goodness bro, but focus. Alright, we're trying to do something here and you need patience and focus if you want to be a trader, right? No, but seriously, I know that my videos tend to be a little bit longer because I'm yapping, I'm just talking about like crazy, but I want you guys to very feel the authenticity. I hope that's a word, because as you might notice, my first mother tongue is not actually English. That's besides the point, right? I want to be talking about FOMO and fear of missing out in trading. Let's get into it. So when I'm talking about FOMO or fear of missing out, what do I mean by that? I mean, simply put, FOMO or fear of missing out is literally you being in a state of fear that you're going to miss out on a trading opportunity. I know, right? It's crazy. No, but all seriousness, this is something that you need to lay down ASAP. Fear of missing out has no place at all in trading. It's not good for you. It's not good for you. You should never. You can already open up your trading journal, whatever the case may be, right? And write something down. You should write it down. I'm serious. No, you should never go ahead and chase a trade. Never. Chasing a trade will just make everything much more worse. Straight up, it's gonna make everything much more worse. Because think about yourself. I gave this example before in my first video. If you are a hunter, right, and you're out in the forest and you're trying to, get a trade, aka you're trying to, sorry for everybody who hates hunters or something, I don't know. If you're trying to shoot at a deer or something, you need precision and focus, So you actually sit down in your wood cabin or whatnot, and you're aiming for deer to come by, and you want to make sure that you just need one shot. You either miss the shot or you're gonna hit the shot, aka you either hit your take profit or you're gonna hit your stop loss. But if you, for example, wait and you shoot the deer, for example, and then the bullet flies, right? What you don't want to do is after you miss, shoot again and again and again, because the deer will just run off. Sometimes because maybe the deer, aka the price in trading, is paralyzed, you still have an opportunity to actually go ahead and enter the market again, aka shooting the deer again. Damn, it's a weird example, but it's fitting. So what can I do about it? But actually you don't want to do it, because most of the time what happens, if you miss your first shot on this deer, for example, the deer is gone. It's gone. And you would just end up in a much worse situation, right? However, if you are very patient about it, if you're confident in your skill, aka in your strategy, then you would just execute the strategy as it used to be, or as it's intended to be, and you'll be good to go, right? If you, however, struggle with fear of missing out, let me say something else. It's always better to miss out on a trading opportunity to chase something that is maybe not even there, right? It's always better to miss a good opportunity than to chase something that used to be good or is not even good in the first place, right? There is just no point, right? Because what can happen, right? Let's just say you're waiting at a key level or at a very higher time frame, support and resistance, and you go and check it for any candlestick patterns, yada yada yada, head and shoulders, bearish engulfing, whatever the case may be. Boom, you just execute your trade perfectly, putting your stop loss above market structure, whatever, and you just have a good trade. Perfect. Let's just say you have a fear of missing out, and I don't know, you're too late to the chart, your alarm just sent off and the market is moving way too fast, and now you're not sure, do we get a retest or not? Let's just say, there was this bearish engulfing candle again and the market just rallies off without you. Don't just jump into the trade. you waited for price to get to this specific area for a reason, and that reason is to, minimize the risk on your trade, right? And I don't need percentage. I don't mean percentage-wise when it comes to your risk to reward or something. I mean, we all want to have good entries, not because we want to have the godlike entries or something. I mean, yes, we want to have this, but you get what I'm saying with this. It's like, just wait for a good opportunity. If price rallies off without you, so be it. Either then, if for example the trend switches, right? We were in an uptrend, then we wait at the key level and it's going down. If you, for example, see that you're breaking market structure, for example, and you're putting up supply and demand or like structure points, whatever, and you have an actual good reason to wait for a new retest on a level, then go ahead and take another try on that trade. But if the trade is moving right now and you're like, oh fuck, I want to get in this like ASAP, and you just boom, you sell, god damn, you're gonna have a hard time. Like, you're gonna have a hard time because now you don't know, especially when it's, for example, like a bearish engulfing or like bullish engulfing or whatever, it's just shooting down. Oftentimes it at least comes a little bit up again. It's retracing, it comes back to a lower time frame, supply and demand, whatever. It's always kind of retracing and retesting. But if you just jump into it, where do you place your stop loss now? Do we put it over the market structure? Maybe your risk to reward is now fucked. Maybe you now don't even have a 1-to-1 risk to reward ratio, which, bro, if you trade without at least having 1-to-1, what are you doing? Like, I would say, and I think everybody would agree on this, if you go into a trade, at least have a 1-to-1 risk to reward ratio. You want to at least be able to get out of the market with what you risked. You don't risk 500 and take your take profit at 100. You can take your profits early if you think price would go against you, right? If you aimed for a 1-to-1, so you risk 500 to make 500, but you can see that price is just not willing to go down to 500, and it's like always retracing back. If you don't feel comfortable anymore and you have actual signs of, I don't know about this, your experience tells you, I don't know, close the trade and take your profits, of course. Same goes vice versa, right? If you're a little bit in drawdown, or like in profit, drawdown, profit again, and you don't really know what the fuck's going on, you can either just, close the trade at break even or at a minor loss, because a minor loss will always be better than a big loss, of course. But once again, losing is part of the game. Accept it, my friend. Yeah, but no, in all seriousness, you shouldn't be going after a trade after you missed it. Like, let's just say once again, this example, you went up, you had your key level there, then you had like your candlestick pattern and you're going down now. If there's like a big engulfing candle and it's running up like 10 pips or something like this, just like it falls down. Maybe you have an imbalance, maybe you have a fair value gap, maybe you have a lower time frame supply and demand. You will have a different opportunity within this new trend to go back into the market. That's why on my first video I talked about it's important to be adaptive to the market. It's important to understand the market in different conditions, not just key levels, not just support and resistance, not just supply and demand, but also what is trend lines, what like understanding market structure in general. If you don't know what I'm talking about right now, go and check out the first video. I talk about exactly this. Be able to adapt to the market, right? If you just waited for the reversal point but you missed it the first time, learn a way to re-enter a trending market, because now you have all the weapons necessary to either execute the market, by simply waiting for your supply and demand or like support and resistance, whatever key level, and if you're, for example, in a trending market already, you can still learn something to go into that direction. I talked about this on the first video. Go and check it out. It will help you if you don't know how to do this right now. So that's a, like, in comparison, that's more like a smaller video of mine. But seriously, do not chase price. It's not worth. Honestly, it's not worth. If you go ahead and chase it, and then you have to place your stop loss somewhere else. Let's just say you only want to go for 1-to-2, 1-to-3, 1-to-4, whatever the case may be. I don't care, right? If you place it and you always want to go for a 1-to-3, for example, and now you wanted to put your stop loss way above because that's where your initial entry price was, but you're not there, where do you put your stop loss now? You would have to put it within price, and there might not even be a structure point, and now your stop loss is literally maybe within an imbalance, and then you're getting stopped out, and then you're like, oh my god, trading is not working, trading is a scam. No, your fear of missing out the whole move just destroyed your trade, but it's all good. If trade runs off without you, remember, it's better to miss out on a good trade than to take a bad one. Straight up. If it runs away without you, even if it goes into profit, there is gonna be a different, opportunity for you to either re-enter the market or just wait until another opportunity is presenting itself to you. You're gonna wait again. You're gonna be in your patient room once again. If you think about the hunter example again, if you missed the deer for the first time, either wait 20-30 minutes and the deer will maybe in a position again where you can go with the trend. You know what I'm saying? It retraced and then you can try it again. However, if you miss the move, then chill. Leave your desk. If you fail to re-enter, it's perfectly fine. It's perfectly fine. Maybe leave your desk, whatever the case may be. Just let it rest, and in another day, most likely tomorrow, depending on the time frame that you're on, there's gonna be another opportunity on another currency pair, whatever. By the way, a video to currency pairs is also dropping soon. But just that we talked about this, do not chase a bad trade. It's not worth it. It's all right. Sometimes we miss a trade. Come on, what the fuck? It's all right. We don't need to chase it. We are just gonna be waiting for another opportunity. It's simply that. So yeah, damn, that was a smaller video than usually. Usually I'm just yapping and shit, but I think this time you actually, I think you can grasp what I'm saying here. Fear of missing out, you don't need it. And as long as you are chasing trades that are not good for you, this is a bad habit that will cost you accounts. You can blow accounts by just, having fear of missing out. Lay it off. Accept the fact that you will not be able to get any trade every day. Or like every trade every day. I think that makes much more sense. But you get what I'm saying. Move on. Simply move on. Alright, once again, if you need any more help with this, I can only recommend you getting a bigger skill box, of different strategies and all that, and understanding the importance of adapting to the market, which is video number 1 in this trading psychology playlist. If you don't know what I'm talking about, go check it out. It's on my YouTube, it's in the playlist. And other than that, once again, it's important to have a bigger toolbox when it comes to strategies. And if you haven't found your strategy yet, do not be afraid, my friend, because I will be putting out a lot of strategies on this channel for absolutely free. So what can you do about it? Well, you can just subscribe to the channel and wait until it's time for this video to be released. Comment down below which do you want to, know a little bit more about: supply and demand, trading, support and resistance, key levels. I think by the time that I'm talking about this, key levels is already out. Trend line breaks, whatever the case may be. I'm talking about everything. Go and like this video if it helped you. Comment down below what you want to hear about in the future. Subscribe to the channel so you don't miss the free content. It's literally free. If you want to reach out to me, that is my Instagram right there. You can reach out to me, but spoiler alert, I will not reach out to you first, because I don't want you guys to feel like scammed or something, because there may be people using my name, reaching out to you, trying to sell you something. That is not me. So go and follow this account here, and I'm gonna be coming back to you guys in another video. And up until then, have a great day, and bye bye.